And good morning and welcome to the 5 Minute Morning Miner. It's the 1st of August. Yep, we've done July and we're in a new month. The summer, the real summer. It's Friday as well, so it could be pretty quiet. Morning, Paul.
Good morning to you. Good morning.
Right, it is actually fairly quiet this morning. Nothing particularly flying around, but there's a few companies that we should mention this morning that we're either involved in or very interested in. Let's just start, only because at the end of August I'm going to Mexico, as everybody knows. But Guanajuato Silver gave some drilling results last night, didn't they, Paul? Do you want to go through that?
Yes, this was some drilling results on a new ore block they've got in their Valenciana Mines complex identified. This one identified because it's got such high-grade gold in it. It's in the upper part of what they call the Santa Margarita zone in the mine there. That Valenciana mine complex has been in production historically for about 500 years, and Guanajuato does produce milling grade material from there. These intervals quoted here, no, not that thick, but the thing is the grade is quite high, above 16 grams per ton in a group of 6 holes that they've going to prepare for ore block for extraction this year yet. The reason being, even though these are narrow intercepts, the high grade allows a lot of dilution of the wall rock in order to extract them, and the higher gold grade will boost the operating margins per ton at the mill, so they will take these up.
All right. Obviously, we'll be hearing a lot more about all of the Mexican silver companies as we go along. Now, Cleantech Lithium, it's a fairly short announcement here. They've just pushed along the maturity, haven't they, of a couple of weeks of the loan notes.
Right. There's been a pending date on the discussion on the closing for these loan notes terms, and this is another extension they're giving to the 15th of August. That would indicate that those negotiations are proceeding. They just haven't been finalized in writing, I would say. 15th of August now the new date on that, or the intended date for some finalization on the negotiation on these loan notes.
Let's hope they can get it done in a couple of weeks in August. Won't be easy. All right. Also, there's a little bit of news out on Guardian Metal Resources from their Pilot Mountain project in Nevada, isn't it, Paul? So
yes, that's right. This is about porphyry copper exploration in this case, not the primary focus or initial focus of the Pilot Mountain project. And its historical reference at Pilot Mountain in Nevada has always been about tungsten. But this is copper exploration on their ground there, and they will move a drill rig to this breccia zone that they've identified with sampling at surface here once they have their current program of tungsten drilling completed. Rock chip sampling results they released would indicate that they have a 1 kilometer long section here in one area that has over 1,000 ppm copper exposed there in sampling. So they will definitely put some testing on this. It is the tungsten projects, of course, they are skarn style mineralization, which means they are on the periphery of some kind of intrusion. And now, if that is a copper bearing or copper moly bearing intrusion or one related to such intrusion, that would be worth an awful lot of value to the shareholder.
An exciting stock, isn't it? Anything else you want to mention, Paul?
Oh, we had the Agnico Eagle quarterly production results come out late on Wednesday. We didn't get covered yesterday. Agnico Eagle being the premier gold company on the TSX as far as investor premium is concerned, as on the valuation of shares. Second quarter net income $1 billion, which came in at $2.13 a share. And adjusted net income $976 million or $1.94 a share. So far this year, Agnico has produced 1.74 million ounces, which is relatively flat to slightly down on the half year last year. Their all-in sustaining costs have also risen by quite a lot, actually. It was this time at $2,342 an ounce last year, and it's all up now to almost $3,300 per ounce. So That's the gold price, not the all-in sustaining costs. That's the average gold price received is substantially up. All-in sustaining costs, though, only rose marginally higher. They're now at just shy of $1,300 per ounce.
Sounds good. Yeah, you got to get your costs and your actual price correct, Paul.
That's right.
The difference is the margin and the profit they're making.
That's right.
Right. I think that's probably enough. Everybody enjoy the weekend, and hopefully next week we'll have some more exciting news to get you all going. We're back on Monday. Thanks.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.